Hello and welcome to the Business Standard Morning Show. I'm Swapnil Joglekar. It's 12th of January 2024 and here are the questions we'll be answering today. Are NRIs driving up competition for domestic home buyers? Has India matured as a coffee-drinking nation? Is the rally in Vodafone Idea overdone? And what is the Chennai-Vladivostok Maritime Corridor? Despite a high interest rate regime, India's real estate sector continued to expand at a fast clip in 2023, a growth which was primarily driven by home buyers. While sales of budget homes jumped, luxury apartments sold, well, like hotcakes, with many disappearing within hours of opening of bookings. And a big chunk of them were bought by deep-pocketed, non-resident Indians. But there's a worry in some quarters that NRIs' increased investment may be pushing up the prices of homes, making them unaffordable for many. Shivam Tyagi does a reality check.
As many as 1,113 luxury apartments put up for sale by realty giant DLF recently went off the shelf within 3 days. Their collective worth was a staggering 7,200 crore rupees. And according to reports, NRIs bought 25% of the units sold. NRIs are now upbeat about the domestic real estate market. Until 2020, about 10% of total real estate investments in India came from them. This share soared to 15% by November 2023, and it is projected to touch 20% by 2025. PropTech unicorn NoBroker has said this in its recent report. And most NRIs prefer premium properties with large and spacious homes. 26% of NRI buyers expressed interest in properties with budgets over 1 crore rupees. The Indian luxury real estate sector's size was at $31 billion in 2023 and is expected to reach $83 billion by 2028, growing at a CAGR of 21.8%. A report by Mordor Intelligence says. Additionally, NRIs also prefer cities and localities which offer better amenities. Bengaluru tops the list, with 29% NRIs preferring it. Mumbai comes next with 24%, Hyderabad with 18%, followed by Chennai, Pune and Delhi NCR. Expats from the US, Singapore, Canada, Germany, UK and Kenya are buying the bulk of these properties. But why are NRIs showing an increased interest in the real estate market?
The main reason why NRIs have been purchasing properties in India is because of the depreciation of the rupee. Now the rupee is, relatively weak, and therefore it makes sense for them to put their money into property. And another reason why NRIs have been investing is now because from 2016 we have the RERA in place, and most of the big developers are compliant with RERA to a large extent. So there's now a lot of transparency and there's a lot of security for lottees. Now that's the reason why the NRIs have been investing.
Industry observers say that apart from the depreciating rupee, NRIs are also investing due to an emotional connection with India, buying properties for holiday homes or for future needs in case they want to return to the country. About 60% of the residential property demand among NRIs is for personal use, while 25 to 30% is for investment purposes. But some believe that NRI's increased interest in the domestic real estate market is pushing up the prices of residential properties. India is now the 14th costliest country globally according to Knight Frank's Global House Price Index. It gained 18 spots in 2023. The country also saw a 5.9% year-on-year rise in prices of housing properties in the second quarter of 2024. Against a global average of 3.5%. So, are NRIs driving the domestic property prices?
If you look at the buying that NRIs are doing, it is more or less confined to the luxury and the upper segment part of it, right? Where the bulk of the Indian real estate market comprises of budget and affordable as well. So, in my opinion, while it will have some minor impact on the overall, but the major impact will be seen on the luxury segment of the real estate. And if you have to break down what is driving the increase in price of the real estate, there are a couple of factors. We need to understand that for almost 5 to 8 years before COVID, the real estate prices were stagnant. They did not move anywhere. And what we are seeing is a mix of catch up also happening. Plus, the industry has come back quite strongly, and also the land acquisition has been done at a pretty costly on the higher side.
Till FY 2022, NRIs had invested $14.9 billion in the Indian real estate market, according to a study by a realty firm. In 2023, reports say that there was a 35% year-on-year jump in these investments by Indians living in foreign nations. While the bulk of these buyers buy for end use, investors and speculators too are putting their money as well, which in turn may drive up the housing cost. Critics also argue that the surge in NRI investments could create an artificial demand, leading to a potential real estate bubble. So, are there enough regulations in place for domestic home buyers?
There are no regulations to safeguard anybody's interest if prices go up and then later there's a glut in the market and prices go down, because that's based on how the market works. So there are definitely regulations in place to ensure that developers do not take advantage of innocent home buyers, whether it's NRIs or not. But I don't think there are any regulations which will ensure that there's no artificial bubble created, which might ensure that there's later a glut in the market. Assuming that the NRIs were starting today and they raise the prices by 10% or 20% over the next couple of years, what about the hundreds of thousands of resident Indians who bought over the last 2 or 3 years, who will get the benefit of that upside? So, I think, the benefit is enjoyed by both residents and non-residents.
Industry observers believe that market benefits of investment in housing properties will be equally enjoyed by domestic investors as well as NRIs, which will shoot up the overall housing property prices. And with the Real Estate Regulatory Authority ensuring no foul play from developers, the NRI's interest in India will continue to increase as they are betting big on the overall performance of the Indian economy, which seems to be a bright spot amid a global slowdown.
For most of us, home means a place to slow down, a place where we find warmth of family, and of course, a hot cup of tea or coffee in this cold winter. Traditionally, we have been a nation of tea drinkers, barring pockets in the south, where coffee has long been relished. But with a rise in people's income and increased exposure to the west, coffee has slowly but steadily making inroads in our daily routine. Coffee shops run by both foreign as well as domestic brands are dotting markets and shopping centers like never before. So, have we matured as a coffee drinking nation? Tariq Ahmad and Abhijit Kumar find out.
Gone are the days when Shadi Wali coffee and filter coffee dominated the hot beverage scene in North and South India. Urban Indians are now embracing the allure of quaint coffee shops to start their day at and socialize. And the precise balance of espresso, milk, foam and flavor is also critical to their coffee experience. Coffee culture started making its way into the Indian way of life in the 90s when coffee shop chains began expanding in cities. Presently, the Indian coffee market is worth $0.5 billion and is expected to grow at a CAGR of 9.04% until 2028, according to business statistics platform Statista. The organized players are optimistic too. Global coffee giant Starbucks recently announced plans to double its stores in India in the next 4 years. Nestle also upped its game by introducing ready-to-drink cold coffees, instant mix coffees, and more. Last September, Nestle's Coffee had said that the average coffee consumption per person per annum was around 30 cups in India, whereas the global average was 200 cups. Agrees brand guru Harish Bijur.
Different kinds of coffees are consumed in India. Filter coffee, and particularly filter coffee, which is made through the Udupi chains in the country, they are consumed largely in South India. But per capita consumption in the country is very, very low. The per capita consumption hasn't nudged beyond 137 grams per person per year in India. And bulk of this 137 grams average actually comes from the 5 South Indian states. Therefore, making coffee that much more popular is going to be a challenge. But I think the best way to do it is the liquid way, not the solid way. The liquid coffee that is actually dispensed, served at outlets which we call cafes today.
In light of this market potential, a wave of domestic coffee startups has forayed into the market post-pandemic. Players like Blue Tokai Coffee Roasters, Seven Beans Coffee Company, and Reach Coffee, among others, are giving tough competition to legacy players. Apart from the resurgence of cafes, the growth of the sector is also led by substantial capital infusion. Coffee brands are securing significant funding from investors, enabling them to broaden their presence in the market. Blue Tokai, in Series B fundraising last year, raised $30 million to invest in expanding cafes and stores across the country. And one can't overlook the contribution of the coffee chain Cafe Coffee Day in popularizing the beverage across the country. With net revenues of Coffee Day Enterprises touching 924 crore rupees in FY23, its consolidated coffee business stands at 869 crore rupees. Cafe Coffee Day, popularly called CCD, operates over 500 cafes across the country. Brewing the growth of India's coffee culture is the rise of specialty coffee, rising disposable incomes, and awareness of the health benefits associated with moderate consumption. However, in terms of market penetration, the consumption of coffee remained limited in urban areas.
The coffee drinking culture is growing, and I think that is a positive trend for growers. But the growth will always be gradual. I think it's going to be a gradually increasing curve, not something that's going to be step jumping. What is positive, though, is a lot of the attraction of the coffee chains, a lot of the intensive marketing they're doing, the fact that a lot of upmarket stores have premium single estate coffees. I think these new marketing elements getting into coffee is going to raise the profile of coffee drinking. Earlier, tea has where all the marketing happened. I think thanks to the chains, one is seeing is a lot of excitement around coffee drinking. The idea of going out for a cup of coffee has become cool for youngsters. I think that portends for very good growth.
India's evolving coffee landscape represents more than a shift in beverage preferences. Fueled by homegrown brands, experts believe the Indian coffee industry promises a blend of tradition and innovation.
Let us now see what is brewing on Dalal Street. Vodafone Idea has been unable to arrest the market share loss to its rivals. But the stock of the debt-ridden telco has far outperformed its listed peers, with a 100% rally in the last 1 year. So is the strength sustainable, or are the gains overdone? Harshita Singh finds out in this report.
The share price of beleaguered telco Vodafone Idea has doubled in the last 1 year, surging from 8 rupees at the beginning of 2023 to now holding at 16 rupees. The conversion of some of its dues into government stake, Kumar Mangalam Birla's return to the board, and recent plans of fundraising from promoters and external investors has stoked this rally. Analysts, however, believe that the optimism is overdone. The December deadline for the promoter-led fund infusion of 2,000 crore rupees has lapsed. Moreover, the infusion amount itself is inadequate for the loss-making carrier, experts say.
We don't think that Vodaidea's strength is sustainable unless the promoters of the company are able to put in vast amounts of funding. The 2,000 crore support that is being promised seems too inadequate to us. in the last 3.25 years, the company has been unsuccessful in equity fundraising from third parties. We don't think this is changing in the next 12 months. The capex intensity in this business, it's a treadmill business. Competitors of Vodafone Idea have rolled out 5G networks. The rollouts are getting completed, while Vodafone Idea still hasn't completed its 4G rollout, let alone invest in 5G.
Vodafone Idea has been consistently losing wireless subscribers to rivals Bharti Airtel and Reliance Jio. In October, it lost 2.04 million subscribers, capping its market share at 19.6% versus 38% that it held as the market leader in 2018. Rivals Airtel and Jio now together hold 72% market share. While tariff hikes will benefit the sector ahead, analysts say investors should place bets in profitable rivals instead.
Tariff hikes will happen, but Vodafone Idea, despite the 2 tariff hikes, has not seen major benefits. 2 reasons for it. One, Vodafone Idea has lost customers, so the benefits of tariff hikes have not resulted in the revenue increasing. But we think that investors should stay away from Vodafone Idea. We have a sell rating on the company. We think that investors should probably go for more safer investment options in the telecom sector, which benefit from tariff hikes, like Bharti Airtel.
Most brokerages too hold a sell rating on the stock and expect the share value to slump as much as 69%. Technically, however, the stock is holding its recent strength, and traders can buy the dips as per experts.
The stock has taken a good support at 9-day exponential moving average, and we can see the stock taking a good support further at 21-day exponential moving average, which is placed at 15 levels. The stock can fall at around 21-day exponential moving average, and we can see the cup handle formation again that is placed at around 15 levels. So investors are requested to accumulate the stock at around 15 zones for the short-term target of 18.5 and the potential positional target of 22.
Thus, the stock could continue to see large swing trading ahead. But fundamentally, analysts remain downbeat on the telco. Today, on January 12, the market will react to Q3 earnings of Infosys and TCS, along with CPI data from the United States.
He's making plans for an early retirement. Business Standard.
Analysts, meanwhile, believe that due to customer losses, Vodafone Idea's revenue is likely to remain stagnant in the December quarter. Moving on, the trade between India and Russia increased by over 200% year-on-year in the first 2 quarters of FY24. And just last month, both the countries agreed to establish the Chennai to Vladivostok Maritime Corridor. Shivam Tyagi tells more about this new route and how will it help both the countries.
After months of negotiations, India and Russia finally inked a pact to make Chennai-Vladivostok sea route fully operational. The agreement was signed between External Affairs Minister S. Jaishankar and his Russian counterpart Sergei Lavrov on December 27. Initial rounds of talks to revive trade on this sea route were held in 2018 when the then External Affairs Minister Sushma Swaraj had visited the Russian town of Vladivostok. It was in response to China's ambitious maritime Silk Route connecting Asia with Africa. This route was operational during the USSR period. The round trip via this route will take 24 days. Right now, a ship sailing to St. Petersburg from Indian ports takes the Suez Canal route. For the same round trip, it takes about 40 days. The Chennai-Vladivostok corridor is approximately 40% shorter, covering a distance of 5,600 nautical miles in contrast to the 8,675 nautical miles covered by the current route between Chennai and St. Petersburg port. The route will also allow India a shorter access to the Far East markets of China and Japan. Experts say that in the future, other countries such as Indonesia, Malaysia, and Singapore could potentially become part of the Chennai-Vladivostok Maritime Corridor. This expansion suggests the corridor's potential to evolve into a broader regional trade route, fostering economic connectivity among multiple nations. Indian authorities have identified key commodities including coking coal, crude oil, liquefied natural gas, and fertilizers that will be traded on this route. According to the India Brand Equity Foundation, the bilateral trade between India and Russia for the fiscal year 2022-23 reached $49.3 billion. This figure encompasses $3.14 billion in exports from India to Russia and $46.21 billion in imports from Russia. The major items imported by India from Russia include crude oil, coal, fertilizers, petroleum products, pearls, and vegetable oils. The trade statistics highlight the significant economic exchange between the two countries, with various commodities contributing to the overall bilateral trade volume. Experts say the establishment of the Chennai-Vladivostok Maritime Corridor provides India with a strategic presence in the South China Sea. This corridor is designed with a primary focus on expediting the transportation of coking coal between India and Russia. By securing this trade route, India aims to enhance its economic and strategic interests in South China Sea region.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
India's imports from Russia grew about 5 times in the last financial year. And a major part of this import was of crude oil, whose shipment has shot up several times since the eruption of war between Russia and Ukraine. Well, that's all for today. For more news, views and insights, please log into business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.